Good morning, Starshine. Today is Thursday, January 22nd. We had 8:30 red folder news and orange folder news. And then at 10 a.m., we have core PCE price index red folder news. And that's pretty much it for the day. So don't have to worry about price acting funny or nothing like that besides 10 a.m. Pretty sus. Let me just switch over cameras here. We'll just let me switch the camera. Stay here. Spend the rest of my day. Here we are. That's what we're looking like right now. Thursday, pretty skeptical on Thursdays. It's the worst performing days in the back test. So any trades that we're taking, we're going to be on high alert. Right? Not playing no games today. Yeah? Alright, see ya, bro. Have a good day. That's my little bro. He's going to school. Another reason why I do what I do. Take care of my family. Alright, let's mark out these levels. See where we're at, what price is doing. Switch to the line chart quickly because it's more clear. Looks like we're breaking out of this range. 8:30. News didn't react too much, but London session looks like we had a big trend. We're definitely filling that gap halfway there. Let's check out M&Q. It's probably the same thing. It's already broken out. So here's the thing about pre-market session is that if it's already trending, that's not the most ideal situation for us because we pretty much missed the move. So when New York session starts, is it likely to keep trending? Not really, because price needs time to breathe, right? It can't just sprint all the way all day. It needs to take a break, and which taking a break would be mean reverting. But I've seen this pattern happen so many times, like in the system, where we can go to yesterday. I'll show you guys yesterday what happened. It makes this, has a range, and then it makes its bounce out of the range and takes off. So it goes like this. I'll draw it out. Goes like this. Come up, bounce, boom, bounce. We take off. That's just usually how it looks. So, yeah. Yesterday it was like this. It's in its range, comes up, bounce, takes off. So we'll see what happens today. I'm not expecting anything too crazy. However, we have been pretty chill since 4 a.m. So it definitely could have a move upwards. At least that's what I'm seeing for the bias right now. Broken out of that range. So we'll see what happens. Right now we are at neutral, been trending. Volume doesn't seem too clear. Right now, there's nothing really to do. Besides, just go back to the checklist. We did our morning stretch. It was a light one. Live stream, trading prep. I want to see Bitcoin for that trading prep as well. What is Bitcoin doing? because soon I will be starting to trade Bitcoin because I have to do it for my mentorship program. I have to do 30. Actually, I have to do 100 forward tests with $1 risk, and I'm gonna be using my system on Bitcoin and Ethereum. So we'll see how that works out. Sounds like my girl's dying in the background. I think she's not too well, but I did pray for her this morning. She was included in my prayer. We're trending on ES though. Let me tell you that. Trending on ES though. What's going on here? Let's refresh this page. Okay. Thursday. Super skeptical on Thursdays. Alright, I'll be right back. Okay, promise to follow my system rules. Honestly, today I have no expectations for a trade. Like, if a trade does not show itself fully and clearly to me, I'm perfectly fine with not taking any setups or any trades. If there's no setups, if the market, if she's not gonna give me what I want, if she's not gonna give me what I want to see, I'm fine. I'm cool off that. I don't need to trade. Like, I have no expectations, but I will follow my rules. If they're there, I'll be present for it. 15-minute chart breaks out of a range. 1-minute chart is trending, confirmed trend. We take that signal in that direction. It's really that simple. Promise to follow my risk management rules. Of course, $500 of risk per day, $250 per trade. Move stop to break even at 1-to-1, and I'm thinking about moving my stop to instead of break even, or like if it's at 1-to-1, if it goes to 1-to-2, then I'll move it to a 1-to-1 risk-free risk to reward. So I'm just securing that $250 profit because I'm ready to take this payout and buy another account so I can scale it that way, right? And once I buy another account, then I can simultaneously look to grow those two accounts by just continuing to run my system. So that's what I'm looking forward to doing, and that's my risk management strategy currently. Review previous trade performance. So reviewing my previous trade performance, if we look at yesterday, it was a pretty good day. Yesterday was a pretty good day. Um, so yesterday, January 21st, we one trade, one clean trade. We added in. It was pretty nice. Let's just look at the pictures. Big wick. Move stop to break even. So I had a dream yesterday that it was going to be a big runner, and so I cut my winner a little bit too early. It hit my full take profit and a little bit more, so I am grateful for that. But I did experience a little bit of FOMO, fear of missing out, as I watched the market continue to rise because it went up for another 50 points, which is another which would have been another 2.5 grand. So that happened, but overall it was still a good day. I did everything I needed to do. That previous day was quite tricky. One loss and like 3 break-even trades, so it was actually like price action was just not my favor that day, and I was able to walk away, so that was pretty good. Anyways, let's see what the professor's saying for these daily levels.
Deal yourself by becoming rich.
Take your money, buy Bitcoin.
Going into the session, it was VIX expiration day. Also, we had high volatility leading into just when Trump started speaking, and basically from the moment he started speaking, you saw volatility come down. VIXs reverted right back, and at the same time, saw a nice reaction rally in stocks. Nothing today is more important though. Today is really what matters because all it's done really is retrace for SPY and for QQQ. It's really just retrace back to Friday's close, and on Nasdaq it actually made it right back to that level in the main session. Sorry, in the main session it got as high as just shy of Friday's close, and then overnight this morning we've seen it move up, but that'll probably revert back to where we were. So bigger thing here is follow through or lack of, and Friday's close will be the level I'm watching. That's where this downside move really began, from Thursday's failure at 6:30 for Qs, and then Friday's session trying to hold on to that support. Then you got the long weekend and the gap. Tuesday gap lower. Wednesday, nice, engulfed all of Tuesday's, so retraced all of Tuesday's downside, closed higher, closed back above the 50-day, but with a little bit of wick indicating some sell pressure there when it got back up to Friday's low. So I think first step for Qs is 620, and then since 630 is that big resistance, I think we've got three pretty even levels here. You've got 610, which is right around the prior low, so the yearly low from the first trading day of the year. That was our low before yesterday, or before Tuesday, sorry. That's about 610, and then 620, just right where we're at here, being able to close above the bands and back inside of Friday's range, and then 630, this big resistance above that it continues to reject off. So I think those are pretty simple levels to stick with for the Nasdaq. As for S&P, for SPY, you've got same idea. Main level to reclaim will be Friday's low. If this is just a typical, gaps down on fear and then gets bought back up, it needs to start closing above Friday's close. Otherwise, this is all just lower high territory. If you take off the candles and just look at it, anything up here can still just be lower high, lower low, lower high, low. Maybe you've got a little bit more to go in this correction. I could correct further, but just not out of the woods yet, despite there being a good attempt, at least, to reverse yesterday. I think that's down to the fact that basically every dip gets bought, and it's pretty much every time you have a dip, it's a good idea to buy it in the stock market. Doesn't mean it's always right. It means that more often than not, buying these dips, especially in this case, anything below the 20, but certainly anytime it's coming to the 50, it's been worth buying the dip. It bounces back up, buy the dip, bounces back up, and then it doesn't work. But usually, these 3 to 5% corrections are worth a buy. And I think that's what's happened as well, with combination of the tariffs, Trump talking about Greenland, we want to buy Greenland, so we're not going to use military force, but we want Greenland, and you always Greenland. And I streamed it live, you can see the replay of us watching the whole Trump speech, a lot of yapping. And then after that, the EU came out in all of their glory and power and said trade deal is, what was it the exact term? Paused or frozen indefinitely or something like that. Basically taking trade deal off the table with the US. And that was around here. That's what catalyzed this drop. BTC down to the yearly open, SPY back into this higher low in Qs. And then a couple of hours later came out and Trump had a great meeting with NATO and said there's going to be no tariffs on Denmark or Greenland on the 1st of February. So then the markets shoot up. Typical, it's over, we're back type of day, headlines, news, all that. And that's where we're at. Gold, I think gold really is going to be the main indication here of whether there's more to come from this fear trade. Because gold's rising a lot on at least the perception, that the narrative of gold is that it's rising because of the tariffs and the hostile nature of the US with these other countries. And it's seen as if the US continue to isolate themselves and blah blah blah, that gold's going to rise because it's going to weaken the dollar and people are going to flee away from the US, and it's an anti-US trade. And that's why whenever you saw the good news, bad news, it was the inverse for gold. So at any point there was good news, or perceived good news at least, for stocks, up, gold down. You can see there the same cursor. And the same thing whenever gold or stocks were dropping, gold was holding up. And then we had that big pump through on stocks, and on Bitcoin, gold dropped as well. So pretty clear that these are running inverse to each other. And if gold slows or tops before 5k, likely a good sign for the other markets, particularly US, as it settles down a bit. Silver slowing. It might end up just rolling over. This isn't typically how these parabolic moves end. You're usually going to see some kind of blow off top, but we did have that back in December. So you had that big blow off type move, and it sold off and held up and ended up being consolidation for higher. Interesting to see here. Volume continues to rise, at least on silver futures and silver ETFs. So yeah, the volume's still rising, price still rising. It doesn't seem to be a top yet, but it's slowing. So it's probably I would say there's going to be another spike or push out of this. I don't think that if you're a bear, you'd be too comfortable here. If you were shorting from the Wednesday weakness, which there was, and that got absorbed straight back up again, and now it's kind of stalling at the highs, you want to see things move a lot faster to the downside if you're a bear there. And even if it does drop, given this price structure here, I think it's not impossible to top out like that. It did push above those highs back below, and it could top with a whimper. I think maybe people are expecting it to top with a bang, and maybe just rolls over like that. Whereas usually in these type of moves, you're expecting some kind of final acceleration move and this and like that, and like a real classic top. And of course, it may just not be topping at all. It may just be going up forever and never, ever, ever, ever going to stop going up. Which of course, it's not true. But these moves can and will, I mean, it's been saying this for weeks. Like when it's parabolic like this, been saying this since it was like 60 and 65. When it's in a parabola, don't forget, like back here, it was also looked like it was too high. There, right? It looked like it was crazy because it just can keep going, and it does, keeps going and going and going. But eventually, it will collapse under its own weight. It's just the nature of how these moves go. It can't literally keep going up forever, which is not a bearish thing. It's just reality. And I wouldn't touch shorts on this at all until there's the thing with these, like, not that I'm not even trading silver, but maybe some of you do, but even same as gold, it's same as when gold was going on its big run. Like gold is still rising now, but when gold was really, in this parabolic phase here, whenever it was really pushing, or maybe even like when it was having these pushes here, but more so this move in September, October, it's like everybody wants to short the thing that's rising, which is retarded, obviously. And it's, talking about and looking for, I don't think you need to go long here. I don't think going long here is necessarily a good idea either, outside of maybe a trade. I don't think like investing into silver at 93 is a great idea in the near term because it's doubled in a matter of weeks. So it's just not a great entry point when it was at, it was at 93 now, it was at 45 in September, and it was at 45 again in October actually, and in November. So fucking 2 months, it's doubled. And that doesn't mean it won't continue going up, but the idea of shorting these things or anything, just study any chart ever and just be like, when it's parabolic like this, when it breaks, it's very, very, very clear. Like when the parabola properly breaks, there's no doubting it. And this is parabolic. Not every rally is parabolic like this, but this one is. And all of those parabolic moves break the same way. They just collapse under their own weight. It's not the same as if something's just kind of rising and steadily. Like it's not like the way the stock market tops. Like if you look at like SPY, like the overall index, it does not top like that. It just slowly tops out. It doesn't blow off top and then break, and it slowly tops out. What you'd see is like a distribution or
Okay.
whatever. And even at the top of the bull market, does not top out with any kind of parabolic. Again, it's individual stocks that would, not the index. Outside of COVID, which obviously was an exception, Black Swan, that did just drop straight down. But even before that, it's not like it was parabolic. It was just steady. Stock market grinds higher, touched the 50 higher. Nothing there to indicate that there was mania. That was much more just the COVID panic and the sell-off that accelerated. But for an individual commodity, especially like silver, with proper supply-demand dynamics like this, and you've got the shortage of physical and the squeeze and blah blah blah, the way it tops is just going to be the way that these always top. Very much like Bitcoin would have done in the past, or like a crypto token would. Like, it is going to be parabolic, and then that parabola is going to break, and you can either identify that sort of early as it's falling back through its structures here, like when it breaks that first structural level and it's got that real downside momentum. You've seen these gaps, which again we don't see any of yet. First attempt for that could have been back in December. It stopped it and ate it all up. So there's just no point getting in the way of this, and I think that if you do see it rolling over more kind of slowly, I think that would actually be more so a dip before the actual top. I think whenever or wherever this ends, I would bet on it ending with a bang, not with a whimper. And if it ends with a whimper, if it just sort of slowly rolls over, then all good. I mean, that's what happens sometimes, but I think this is going to, given the nature of it, it's probably going to continue accelerating until there's a real final push. And for BTC, I'll go more into it on Trade of the Day, because today we've got some data. We've got core PCE, so I'll touch on that here. PCE, there is core PCE is at 3 p.m. UTC, and before that we have GDP at 1:30. So the usual hour before the US New York session. Got final GDP and you got unemployment claims. Neither are that important. GDP matters, but we've already had GDP, the reading in before, and so it's much more about core PCE inflation, which usually does come out an hour before, but now it's coming out at 3 p.m. So that's going to be 30 minutes after New York Open. So in terms of trading today, I'd be holding off intraday, just trade wise, until we see the first 30 minutes of New York play out and get that number dropping. So be mindful of that. That inflation data usually drops an hour before, like a CPI usually drops an hour before, but probably because of the GDP coming out at that time anyway, it's actually coming at 3 p.m. 10 a.m. New York time, 3 p.m. UTC is when the core PCE inflation data is coming out. And that's got a potential to be a market catalyst. It's the main inflation measure that the Fed look at and all of that. And we saw those outflows persist. So big day of outflows on Tuesday, which is what IBIT was here, included with that. And then yesterday, we've seen probably bigger again, because we saw big outflows on Fidelity. We don't know the IBIT, obviously it's a day behind, but you can see in totality. This now looks to be the same exact thing happening again. So if you remember at the start of the year, we had that first couple of days of inflows, followed up by, see, the first couple of days over $1 billion in, next 4 days all of it wiped out, basically almost exactly. Then we'd seen about $1.5 billion come in here, 1.5, 1.6 billion come in these 4 days to start last week, and then this week we've now seen 1.3, 1.5. So there's no net inflows going into ETFs. There's no net new inflows into Bitcoin ETFs. And that's one source of demand, and that's from the start of the year, and we're right back at the yearly open. So it's like one source of demand that's just not there yet. The inflows are not flowing. They're not flowing in and staying in. It's kind of in and out, creation and redemption, and there's probably good reason for that. The carry trade is dead at the moment, which means the buy ETF or long ETF, long spot, and short the futures. Look, I'm getting served golf app ads. Interesting. I'm trying to get. Oh shit! I've clicked on. Fuck off. What am I going for here? Distracting myself. And we've got the CME futures open interest dropping, so that carry trade is unwinding, and the basis dropping as well. And that's a big part of what's driving this lack of demand. There we go, GN. Trade of the day, I'll break down Bitcoin, price paths, and core PCE.
Price is in this mini range right now.
Deal the problem by becoming rich.
Take all your money, buy Bitcoin.
Good morning, starshine.
Welcome to the real world.
Mortgage your house and buy Bitcoin with
Breathe air.
There's no second best, okay?
Jim. Right, so today, GDP coming in an hour before New York session. I think we're going to retest the early open as well. Don't know if it's today or not, but I think we'll retest the early open. As we touched down into it and moved away inefficiently, so I'd suspect that this will get sold into and we'll be back at the early open soon enough. That's fucking yesterday, not today. So the GDP, final GDP print comes in at 1:30, and then 3 p.m. you've got core PCE. And GDP is not as much of a factor. You get GDP in 3 installments. Normally, this quarter it's been only 2 because of the shutdown, but normally you get advanced, preliminary, and final. So for each quarter, GDP is the measure of economic expansion or contraction. So when you get negative GDP, that's how you get a recession, multiple quarters consecutively. So what we have here, we've already had the preliminary, we didn't get an advanced, so we've already seen the most important one. Usually the first GDP reading you get each quarter is close, if not exactly, what the actual final number will be. So it comes out in 3 parts anyway, and so there's potential the market reacts to each of them, but I don't suspect it will. I think that this is going to be a bit of a nothing burger, especially because the bigger news comes after, which is the inflation number, core PCE. Just with that being said, be mindful an hour before New York session there is a market potential mover, catalyst, and price is compressing, consolidating here, so absolutely nothing here of note or of interest, because you want to wait for price to expand away from that before there's any viable trades. I think I'm looking for Bitcoin to get up to around 92 to 93, and I think from there, depending on how it moves, that's the area for shorts. For me, I think that gap, if we're going lower, if we're just going back to revisit the early open or even going lower, I think that gap remains, but we can easily revert and squeeze, and probably should revert and squeeze up into this resistance first. 2 ways that would happen. I think normally the way it's hugging the 50 here, I think we go down first, but wouldn't touch it until it would get lower. You know, I'd have to see price really take out the early open, or at a minimum retest it. Either a double bottom, retest the early open that holds, would offer a decent long opportunity. So I'd be looking at longs from down here, or a sweep. So either or. If it comes and takes out the lows and comes back inside, both of those, be looking for reversal with views of going back up. Shorting from here down to there doesn't particularly interest me, because nothing, 89.5 is a solid level that price was holding at on Tuesday's close, and then we've seen that act as a bit of a pivot throughout the volatility yesterday. So from here to 89.5, it needs to actually break that, and then when it does break it, you're down at 89, and you're only 1k away from price holding up. So I don't think that there's much opportunity here outside of short quick scalps, but for me, I just wait patiently for either a holding of the early open or a retest, sweep of those lows. And if we're going higher, it's going to have to flip this 50 and start to move up on it. So if we do flip that 50 and we start to move higher, I'll be looking at momentum plays for not the first push, but the second push. So if you push through, I'll be looking at the second push. So if we push through 90 up towards 91, and we retest and reset, and we stay, it doesn't have to be the 50 itself, but we stay with uptrending structure, then after that move would be longs up to 93, and from there looking for shorts, and really anywhere in here, but just looking for shorts in general if we do find resistance up at either 92 to 93. I mean, it could really be anywhere in this area. There's an untested breakdown level as well, about 91.8. This will be based on price action itself. I think if we start to flip it and move up, there's room for it to extend beyond this 92, but those are the levels I'm watching. So for me, longs above 91, so above it retest, and then 91 up to 93, longs make sense. Shorts anywhere from 92 to 93 on any confirmed reversal, lower time frame, and then more longs 87.5, so yearly open, or 87 itself if we sweep, and that's it. So here I view this as like mid, as you can see. It's like the middle of what I think we're going to be doing. We had our downside move, we had some volatility, some chop, and so we're sitting, consolidating, holding, and we've been holding for 12 hours more. It'll be almost 24 hours by the time we get into the session. So this is a level which I think is a midpoint. If that's a midpoint, this would be an extreme move down, this would be an extreme move up in our recent swing from this high to this low. So I'll be waiting for one of those two levels to get hit in order to play a reversal, like for a long reverse into short or vice versa. And following move on the way up is potential, but only if we see a move up, retest, and continuation. So those are the plays. And I don't think the PCE or GDP will be a catalyst for any of that. It will probably give some movement, but it's not like it's going to send it to 93. I think that move will come regardless of the data today. Well, possibly that data is the first push. Maybe that data is the first push that takes to 91, or to the downside, that data is the push that takes us down to 89. So I'll be watching that closely, 89 and 91 as areas to watch as we expand out of this consolidation. That's where I think you see if price comes up into it, I think you hold there, price comes down, you hold there, and then break in 89 takes you to 87, break in 91 takes you to 93. That's essentially what I'm watching for. Yeah.
Potential trade, but I want to wait for that candle close because it's also a potential fake out, which is pretty common. Just want to wait to see this next 10 minutes. Just be patient. If your setup is there, your setup is there. But if it's not, then I'm not gonna force nothing. The market cannot get me to force no trades, bro. Look at that fake out, bro. Market can't force me to Market cannot induce me to force no trades. I'm patient. I'll wait for my setup. And if my setup doesn't show, I won't trade. That's just the type of person I am. Looks like the AM session is going to be mean reverting today. Maybe someone will buy a watch Saturday. The market's trying to fake us all out right now, man. I don't think nothing will really happen till 10 a.m. Looks like the buyers are still coming though. Still coming in the market. You made a new high in the 1 minute. Trending. VIX is trending lower. It's looking good for this next 4 minute candle close. I just want to see this candle close, then we can set a limit order. Because it's not entirely promising right now. A lot of buyers, but just need to see that candle close. Anything can happen. Once it gets to like 30 seconds, then we'll know that like the direction of the candle close, but 3 minutes is still a lot of time. Like, look at that. That's why we wait for the candle close. Like, that's just ugly. Super ugly. It comes out and right back into its range. I'm telling you, Thursdays I'm skeptical as fuck. Thursdays I'm waiting for the motherfucking candle closes to happen, bruh. But it is at this bottom end of the range. Like this area here. But look at that huge, oh my god, look at that huge wick rejection. Right at that 960 level, it's not giving it up. Could be closing bearish. See? Isn't that, do you see why we wait for that candle close? 3 minutes is a lot of time. That's ridiculous. That's some bullshit right there. That's some fake out price action at its finest. I'm seeing this as a mini range. That 6950 level, if we can close below that, and on the 6945 level, would be a good close because of all this price action. Looks like we're just at the bottom end of that range though. so far, this is what I'm seeing. I'm seeing liquidity forming here. And the same thing happening right here. That candle closed bearish. Bears are entering in the market. Ugly price action. Very uncertain. Not much to give here right now. Could be a PM session move. Making its way down again. I just want to journal this.
But for now,
Trending to the downside. Looks like we're making that move down. I just want to see it be clean in order for me to take a trade. Like, it looks pretty comfortable. So something like this. Yeah, that seems like a pretty good setup. Make sure my brackets are on. Trending beyond 1, so we're trending pretty hard. Sellers are in control of this market, strong wick rejection. We might not get that complete full fill. Market is making a strong push down. Broke through all these levels, trending very strong. We might get the pullback that we want for our entry. We might not, because the trending regime is super strong. We're at this like bottom signal, but sellers are taking this candle right now. It's at a 2. pretty strong trending market right now. It's very strong trending down. Sellers are super in control right now. But we need some type of like entry. $6,945 looks like a good entry. 6,9. Yeah, 6,945 is where my limit order is. For a short. And that is a fair entry if I can get that. But who knows, because strongly trending. Like ridiculous strength. Bruh. I'm not gonna chase price. If it gets me my fill at 6,940, then I know it'll get me my fill. But if it's not gonna get me there, then I'm not gonna chase price. So we'll see. I'm totally fine with not trading today. If this doesn't get filled, then it just meant not. It was just wasn't supposed to trade it. What I'm seeing is trending is super strong. see what happens here. Looks like strong continuation. Looks like pretty strong continuation here. But then we also have red flag news at 10 a.m. So not sure if we're gonna get filled here. Then we have news at like in 2 minutes, so don't know.
Order filled.
Whoa.
Order filled.
What the hell is that, bruh? That was weird. That was not what I meant to do, bruh. Like super strongly trending and I can't get filled. trending strongly. So the Bears remain in control. I don't know, someone tells me you're just not gonna get fucking filled. There's nothing I can do, guys. There's literally nothing I can do.
Order filled.
Okay, this is fair. This is fair. That was rough, but we're in the trend now. So that's fine, but that was like, what the heck, bro? We're a part of the trend, which is cool. Now I feel like at ease, because we're a part of the trend. Okay, whatever happens here, happens. It's cool. I'm fine with it. If we get stopped out, then we get stopped out. But if it goes in our favor, I'll be grateful. Would like it to just go 10 points in our favor. We'll see what happens. That was a little bit of a rough start, but it's okay. Sellers are still in control. We're part of the trend now. Strong wick rejection. Just make that leg down, and it'll be cool. Trend following. Breakout. Pullback entry. Limit order. order flow harmony. Was it 0.5? It was a rough entry order. I'm gonna be honest. Everything was there. Let's upload our screenshots. Part of the trend. This is good. Was a rough entry, but we're in there now. Our part of the trend missed a couple of our limit orders, which caused us to chase price slightly. At 10 a.m. we took that quick loss with red flag and goose. Seeing a wick rejection, trend is weakening. Strong wick rejection now at 6934. Kind of just consolidating in this area here. So I would like to see another low happen. We'll have to wait and see what happens. What time was that other trade? Entry at 10 a.m.
Order filled.
2 losses for the day. That's it. We have to stop trading. Pretty tough. Pretty tough. Definitely was feeling nervous. Not getting filled here. My limit order was like right here. It was like up here and we just didn't get it filled. That was tough. limit order here. And we're just like completely late to the party. Like sellers are super in control.
Order filled.
Fuck, guys. Yeah, we gotta log off. Got to log off. Strong with rejection, bro. Come on, man. This is it. This is done. We're done. This is the last trade. I'm going to do other work. It's done. It's done, y'all. 50 push-ups, bro. That's ridiculous. It's 50 push-ups. Man. So
Order
yeah,
filled.
I gotta be very careful here, man. I gotta be very careful. Fuck. We just missed our fill, and it's just. Man, that's wild, man. 3 losses. We went beyond our daily loss limit. Super bad. Super bad. Super bad. Broke our rules. So super not feeling good about that. Price just pretty much perfectly hit our stop loss and then reverted. That's super bad. We have to stop trading now. Which is fine. And I said I was okay with not taking any trades. But instead I just took 3 losses, bro. What can we learn from this? Let's just go to our journal. Alright, let's summarize the day. Here's what happened today in perspective. You wrote, you missed your limit orders, you felt FOMO and chase price. took a loss that broke your own daily risk limit. Recognize this is a rule violation. You feel you must log off and reset. These are all real trading experiences, not moral failures. Many traders struggle with the same pattern. What matters most is that you see it and intend to correct it. Why what you're feeling is normal. FOMO and rule breaking happens when price moves fast, you missed optimal entries, your nervous system goes into fear of missing out. Emotion takes over your plan. That's not because you're weak, it's because the brain defaults to loss aversion and dopamine chasing. It takes time plus patience to train it out. The key insight you just had, you recognize that you broke your rules. That alone is a huge step. Many traders fail to even acknowledge that. They rationalize or justify the behavior. You didn't. You said, broken rules, I must log off, I need a break. Those are self-protective responses, not defeative ones. Logging off is the right call. Here's why. Your daily loss limits was breached. Your rule said 500. You respect that limit as a rule, but then exceeded it. Now the smart move is to stop trading, not chase recovery. Your emotional state matters. You felt FOMO and regret. This affects decision quality trading, while emotionally usually leads to more rule violations. You already recognize the mistake. That's more valuable than being right on trade setups. Reframe the day not as a failure but as feedback. Instead of I screwed up, try today I learned where my weakness appeared. When I miss entries, I get impatient. My nervous system reacts faster than my rules. That's not self-criticism, that's observation. What you did well today, you had a profitable day yesterday. That shows you can execute cleanly. You self-reflected instead of brushing things off. You recognize the importance of stopping. You know where your emotional triggers live. Those are wins in the psychology game. A small rule to add to your journal. If I break a major rule like risk limit or chasing price, I must stop trading immediately, even if I'm in profit for the week. That preserves capital, financial and emotional. What to do next right now after logging off? Step away from screens. You've already made the smart call here. Do a short grounding exercise, even 5 minutes of breathing. Journal the day focused. Truth you can hold. One emotional day does not define your ability as a trader. Your ability is shown by how you respond and adapt. And right now, you're responding with awareness and intention. Okay. That's it, guys. That's it for me today. It's a quick day. There's literally nothing more I can do besides continue to I definitely don't want to double down and break my rules, so I definitely have to just stop trading. I feel like that's the best decision for me right now. Yeah, it's a tough one. It's pretty tough. Pretty tough. We're at 3, brought it down to 750, so that's pretty tough. It's a big loss. But in the grand scheme of things, that seems pretty normal. So anyways, guys, that's it for me trading today. Not looking at the markets at all today. I'm done. I'm just gonna continue my work. Go to the gym. I'm gonna eat, continue my work, and go to the gym. That's it. It's over. See you guys. Peace.